Artificial intelligence is the hottest story on Wall Street. From Microsoft and Google racing to dominate AI, to Nvidia becoming the most valuable chipmaker in history. The narrative is everywhere. AI is the future. And if you're not investing in it, you're missing out. But here's the uncomfortable truth. Every time the market becomes obsessed with a single idea, history shows us the same pattern. Overinvestment, hype, bubbles, and eventually collapse. And if you look closely at today's AI craze, the warning signs are everywhere. Some analysts even say this bubble could be bigger than the Dotcom crash of the early 2000s. So let us take a deep dive into the AI stock bubble. Why it's happening, how it compares to the Dotcom era, and what it could mean for investors like you. Let's start with valuations. Nvidia, the poster child of the AI boom, has seen its stock price skyrocket more than 200% in less than 2 years. Its market cap has crossed over $2 trillion, making it one of the most valuable companies on Earth. Microsoft and Google are pouring billions into AI startups, with Microsoft betting heavily on OpenAI, the maker of ChatGPT. Smaller, AI-focused stocks, many of which have no profits and little proven business model, are also being bid up by investors desperate not to miss the next big thing. This kind of parabolic price action should look familiar, because it's exactly what we saw during the dot-com bubble of the late 1990s. Back then, the internet really was revolutionary. Everyone knew it was going to change the world. And they were right. It did. But that didn't stop investors from massively overpaying for companies with no profits. No real products, and often nothing more than a website and a business plan. The Nasdaq index surged 400% between 1995 and 2000. Then, it all came crashing down. Trillions of dollars were wiped out, and it took the Nasdaq nearly 15 years to recover. Today, AI is following the same script. AI is real. AI is transformative. But the market is acting as if every AI stock will be a winner. And that is simply not how innovation plays out. One of the biggest problems is the picks and shovels argument. During the gold rush, it wasn't the miners who got rich. It was the companies selling picks, shovels, and supplies. In AI, the picks and shovels are GPUs, the advanced chips made by Nvidia. Investors see Nvidia as the ultimate can't-lose stock in this boom. But when everyone agrees that something is a sure thing, that's usually when the danger is highest. Nvidia's valuation today assumes not just growth, but explosive, never-ending growth. If demand for AI slows even slightly, the stock could implode. Another red flag is the sheer amount of speculative money flooding into AI. Venture capital firms are throwing billions at AI startups, many of which are just rebranding old tech with an AI label. Public companies are doing the same, adding AI to their business descriptions to pump their stock prices. We saw this exact phenomenon in 1999 when companies with nothing to do with the internet added Dotcom to their names and saw their stock soar. That's not innovation. That's mania. So, is AI just another bubble? The truth is complicated. AI is real. Just like the internet, it will change everything. But bubbles happen not because the technology is fake, but because investors confuse the long-term potential with short-term profits. Amazon was a dot-com company that survived the crash and went on to become a trillion-dollar giant. But for every Amazon, there were 100 pets, comms, that went bankrupt. The same thing will happen with AI. Some companies will thrive, but most will disappear. The key risk for investors is timing. Bubbles can last longer than anyone expects. The Dotcom bubble lasted years before it collapsed. The housing bubble grew for a decade before the 2008 crash. AI stocks could continue to rise for months or even years. But when the bubble pops, it will be brutal. If you buy at the top, you could lose 70, 80, even 90% of your investment. There's also the broader risk to the economy. If AI becomes the centerpiece of corporate investment, a collapse could trigger mass layoffs, bankruptcies, and even a recession. Tech companies are already cutting jobs as they spend billions on AI. If the returns don't come quickly, the financial consequences could be severe. So what should investors do? The lesson from history is clear. Be cautious. Don't chase hype. Focus on companies with real profits, sustainable business models, and competitive advantages. Nvidia may be the king today, but no king rules forever. Microsoft and Google will dominate, but smaller players will vanish. If you're investing in AI, understand that most of the hype will evaporate, and only a few companies will survive. The AI stock bubble is real, and it's growing. It may not burst tomorrow. It may not burst this year. But when it does, it will separate the true winners from the pretenders. The question isn't whether AI will change the world. It will. The question is how much pain investors will have to endure before the hype meets reality. Because if history has taught us anything, it's this. Innovation creates revolutions, but bubbles create casualties. The AI revolution is here. The AI bubble is too. And only time will tell which side of history you'll be on.